Hello everyone, Dave and Nicholas here. Hope you're doing well. I just want to send out a quick video update. There's been a lot of activity in the market. Obviously, we've seen a lot of selling over the last really few months, especially over the last couple of weeks. We had some pretty ugly down days earlier this week, late last week. So I just want to send out a little video of what are some of the things that we're watching. What are some of the levels that we're watching for the markets? What do we think is going to be kind of a catalyst to kind of help put a support for the market? So I just thought to give you a quick update. So I'm going to share my screen here. So let's go to this. Here we go. Okay. So we've got a chart here of the S&P 500, and we're seeing a lot of pressure today. So if I zoom in on this, you can see as of this video, markets S&P is trading under 4,000. If we zoom out, you can see. Let me go to my 1 year. Here we go. You can see we've kind of broken these trends all throughout, right? So back in the back from October to fall of last year, S&P traded down to about 4260. It got down to 4280. This was late January of this year. Here's right where the Ukraine-Russia war started, kind of that late into February. You can see markets really started to recover in March, and then April, we've just seen a straight down pattern. So this is kind of where we say, well, what levels are we looking at right now for the S&P 500? And let's just do this. So let me go back here. Let's do this. We're going to go back to, let's just say October of 2020 till today. Get us a nice little picture here of the market. So I'm going to draw a support line right where we kind of see some support. So actually, I've already got it in there. So you can see this 3,800 level for the S&P. This is going to take you back all the way around January of 2021. So the odds are that the S&P, which is trading right around 4,000 today, the next level that I think it could test is about 3,800 on the S&P 500. So that's about a 5% move down from here. So I would not be shocked if markets traded down, S&P traded down another 4 to 5% from here. So that's the first level. If you break 3,800, then you really look down to this level, this 3,600 level. So I'll draw another trend line here at this level right in here. That's probably your second defense layer. So 3,600, that's quite a bit more. You're looking at 400 points. Yeah, that's another roughly 10% down from here for the S&P. So I hope we don't see that. So I'd be looking for this 3,800, 3,850 level to hold on the S&P. If we break that, you're probably looking down at this 3,550 to 3,600 area for the S&P 500. So one of the positive catalysts that we'll be looking at is the 10-year Treasury. So let's look at our 10-year Treasury here. So what you can see is the 10-year Treasury right now is trading just under 3% on the 10-year Treasury. But if we go back to 2018, I do want to go back and look. Let's do a custom all the way back to October of 2018. Probably have to go back a little bit before that. So September of 2018. You can see here's the 10-year Treasury sitting at 3.2%. So if I draw my trend line again, this is all the way back. So if you remember back in 2018, that's when we had the last Federal Reserve taper tantrum. Market sold off 20%, but the 10-year Treasury went all the way up to 3.2% before coming down pretty significantly. So where are we at today? Well, where are we at today on the 10-year Treasury? We're right at about 3%. So, this is where the 10 years probably going to go to 3%, 3.2%. So what will that mean for markets? So if the 10-year can stay around that 3.2%, doesn't surge much higher than that, that'll be a bullish catalyst for stocks. So I think we're probably going to get there. I think we'll probably hit this 3.2% level, actually right in here. I should have drawn the line. Yeah, right about there is our level. we'll probably hit that. So this will be very telling to see what happens. If we go much further than 3.2 on the 10-year treasury, I mean, there's a lot of selling pressure right up here on 32. So I don't know if we're going to get above 3.25, but I think we'll at least hit 3.2%. If we hit it, bounce off of it, 10-year rates stabilize, that will be bullish for stocks. Last thing that we're looking at is the VIX. So VIX is the volatility index. Tells us how high volatility is in the options market based on the S&P. So obviously during COVID, we saw a massive spike in volatility, but let's just look at what's been going on here in the short term. So the VIX right now is trading right at about 34. But back in January, the VIX spiked all the way up to 38. In February, the VIX spiked all the way up to 37. This was the Russia invasion of Ukraine. We did see the VIX spike up to 36, but we haven't seen the VIX spike to the levels that we saw earlier this year. I'm looking for one or two more big VIX spikes, which would hopefully give a washout for some selling before I feel very confident that this selling pressure is over. So overall, we're looking for the S&P to hold support, right? If we look back at our S&P, just as a recap, to hold support at our 3,800 level, which is going to be somewhere right in here. We want the S&P to hold support. If we can hold support here, where's my chart? Yeah, right in here. Okay. That'll be positive for stocks. Does mean that there could be some potential selling left to go from here. I would say easily 4 to 5% down from here. If we hold 3,800, if the 10-year treasury can hold around 3.2%, if we do see that big other bout in VIX volatility selling, all those three are factors that I'm looking at that would give me a positive sign for all clears in the market. The last thing is just the geopolitical issues, not really a market technical issue, but I want to see some resolution on China shutdown. What China's doing with their COVID shutdown policy is absolutely just insane. It's almost sinister. So car manufacturers are having a challenge getting parts. That's hurting companies like Tesla, Ford, GM. Really, all types of manufacturing is getting hurt with supply chain issues. So they're just adding fuel to the supply chain issue that we're dealing with globally. And then also Russia, Ukraine, probably unlikely, but any peace resolution that comes out of Europe with Russia and Ukraine, that's going to be a positive catalyst for markets. I don't think you need those geopolitical issues to solve themselves for markets to bottom and recover. But if we do get that, that's going to add to the positive catalyst. But again, the three things I'm watching: 10-year treasury, S&P holding that 3,800 level, and then also the VIX giving us maybe one or two more good down selling, where almost like what we saw earlier this week, where we see a good flush out, and then the VIX coming down. All three of those are positive momentum, but we're getting close. This is still, in my opinion, a great time to buy good companies. We've been buying more oil companies because they pay great dividends. We think that would be a good place to hide in the coming weeks. But tech is becoming more attractive. So there's great companies like Microsoft, Apple, Amazon, Google, that I think this is about as good as a buying opportunity as you're going to find. We're probably going to see some more selling pressure for some of these tech names, but those company like Microsoft, that is a software subscription-based revenue model, which I love. Amazon, with their cloud, Amazon Web Services, the e-commerce part of Amazon is one that you think of, but really it's the cloud is where the future growth for Amazon is going to come from. So it's why we like Amazon here. Google search, the #1 search provider as well. So these are some companies that I think you're getting some good value. Apple potentially see some more selling there because it hasn't sold off. But if we see Apple sell off another 8 to 10% from here, that to me is a tremendous buying opportunity that I would jump in, and we will be jumping in on that as well. So again, there's a lot to consider. There's a lot to be uncertain about, but just know we feel very confident that we are going to see possibly some more selling. But when we look out 12 months from now, a year from now, we feel very bullish on the U.S. economy. Frankly, the U.S. economy, in my opinion, is the strongest economy in the world. And sometimes it's not about are we going to a recession or not, but more of are we going to be the most resilient relative to the rest of the world? And I think we are. irrespective of a recession, that means capital is going to be flowing into the US. So just know we're here to answer any questions that you have. We are watching this closely. Any opportunity that we have to buy, we will certainly be doing that, and we'll continue to update you as you go forward. But anything that me and my team can do, any questions, just know we're here to serve. So we'd be honored to help in any way that we can. Have a blessed week. We look forward to talking with you and helping you if we can. Bye-bye.